We're in the digital gold rush, and 2035 is the .99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. Yeah, there's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035. There's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy, or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy one Bitcoin.
The cryptocurrency market is sending mixed signals at the moment, and investors are growing increasingly nervous. Bitcoin recently reached a record high of $126,000, but over the past few weeks, it has pulled back sharply. MicroStrategy stock, the most visible corporate bet on Bitcoin, has declined by roughly 27% in just 1 month. The volatility is brutal, and for many, the question is unavoidable. Are investors losing faith in Bitcoin? The anxiety feels justified on the surface. After years of anticipation, Bitcoin finally broke into 6 figures, institutional money poured in, and the regulatory environment improved. Yet instead of sustained momentum, we're watching sharp sell-offs and wild swings. For retail investors who bought near the top, the losses are particularly stinging. For skeptics like Jim Chanos, who are actively betting against MicroStrategy, the pullback appears to be vindication. But Michael Saylor sees something entirely different. To him, this isn't a crisis of confidence, it's noise. Saylor argued that the fundamentals supporting Bitcoin have never been stronger. The accounting has improved, the tax regime is more favorable, major banks are now offering support, and the political environment, especially under the current administration, has shifted dramatically in favor of digital assets. More than 100 companies have added Bitcoin to their balance sheets in the past year alone. The derivatives market is surging, ETF flows are accelerating, and the technology itself continues to evolve. So why is the price struggling? Saylor's answer is simple. Equity markets don't always reflect reality. They lead, they lag, and only occasionally do they get it right. For him, the current dip isn't a warning sign. It's an opportunity, the best one in years. While short sellers celebrate and headlines scream caution, Saylor insists that now is a much better time to invest than 12 months ago, precisely because sentiment has turned negative while the fundamentals have strengthened. Let's hear more from him.
If you're an investor, it really comes down to what your time horizon is and how much volatility can you stomach. So if you want max performance, you're going to take max volatility. Strategies up 75% a year on average for the last 5 years. So you can actually outperform Bitcoin if you buy an equity that's amplified like MSTR. If you don't want to trust anybody, you want no counterparty risk, you buy Bitcoin. Bitcoin's up 50% a year over 5 years. No counterparty risk. It's very straightforward. If you want to have your cake and eat it too, you could buy some convertible preferred like STRK. STRK will get the vol. Yeah, the vol on MSTR is like 60, 70. The vol on Bitcoin is 45. STRK would get your vol to like high 20s. And you get a mixture of a dividend and principal protection and some of the upside of the common equity. And if your time horizon is less than 4 years and you don't have much volatility to stomach, you shouldn't buy the equity or the equity hybrids. You should buy the credit, something like STRC. STRC is meant to be very, very stable, around $100 plus or minus a few pennies. And you get like a 10 and 10.5% dividend, that's tax deferred, and you're getting the benefit of the crypto economy, but you're not on the volatility roller coaster. So everybody's got different risk tolerance. They've all got different pools of capital. The good news this year is now you've got a variety of different instruments you can use to ride the digital wave. The last year, there's been 100 companies that have added Bitcoin to their balance sheet. The derivatives market and IBIT has surged. The flows into the ETFs have surged. All the major banks have announced support. The accounting has dramatically improved. The tax regime has improved. The administration support at the SEC, the CFTC, the Treasury level has improved. And so, and the technology has improved. Companies like Block have rolled out support for Bitcoin on Square and Cash App. So all the fundamentals are good. If you're going to be an equity investor, you have to think for yourself, and you have to have a time horizon of 4 years or longer. And equity markets are either going to lead or lag, and occasionally they'll perfectly reflect reality, but generally it's only a few days a year when they'll be perfectly rational. So if you don't have that 4-year time horizon, and if you don't want to make decisions based on fundamentals, if you simply want to park your money in a stable instrument and pick up a stable yield, you should be a credit investor. You shouldn't be an equity investor. I think the irony is the fundamentals of the industry are so much better today than they were 12 months ago, that you've now got an extraordinary risk-reward opportunity. Now's a much better time to invest. You know all the things that you wanted to happen have happened. The market sentiment is negative, but that's an opportunity for the equity investor that makes their own decisions. I think that there'll be some skeptics. They don't really appreciate what Bitcoin is doing. They don't understand digital capital. They don't understand digital credit. But at the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit has got a tax equivalent yield of 4 times higher than bank credit. You can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred. So the market's evolving, and the short sellers aren't really interested in the impact of AI or the impact on digital assets to change the way the world works. They're just interested in being skeptical as a business. So I don't really focus on them. Nothing great has ever been created by a short seller. I think the money market industry is massive. There's $30 trillion worth of assets invested in treasury-type instruments in the United States. Stretches about 1% of 1% of that industry. It's about a $3 billion issuance. There's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy 1 Bitcoin. As people lose confidence in a currency in Africa or South America or Asia, as they lose confidence in a government, if they think that their favorite company might make a mistake, war, famine, pestilence, fire, flood, uncertainty, acts of God, all of these things are risk factors, and they're all risk factors that Bitcoin doesn't undergo and doesn't experience. So as people get educated, I think they can see the appeal of buying digital capital instead of investing their money in equity capital or real estate capital or fiat capital or corporate credit capital instruments. And so this is all a teaching moment, but I think that every single month that goes by, more and more people start to appreciate the benefit of owning 1/21 millionth of all the money in the world forever. I think the country's going to do just fine. This is a hiccup. It's not our finest moment, but right now, the exciting things that are going on are digital intelligence, digital assets, digital capital, digital credit. It's pretty clear that money's going to move at the speed of light. It's pretty clear that 1 billion AIs are going to think 1 billion times faster than us human beings. You can see a world where 1 billion robots are going to build everything we need, where the cars are going to drive themselves, where the products are going to figure stuff out for us. So we're moving toward an intelligent world that is millions of times more efficient and more empowering. So In a world where a billion robots do everything I want before I think to ask for the thing, I don't know how I won't be better off. I think that technology will improve and hardware will improve, and at some point, if the hardware gets more powerful, we'll have to upgrade the software that protects our system. So just like you can expect your bank to upgrade their software, and you can expect to upgrade your Apple software and your Google software and your Microsoft software, and you can expect to upgrade your hardware devices. I'm on the iPhone 17 Pro Max right now. You'll upgrade your computer. Bitcoin is a protocol, but it runs on hardware and software nodes all around the world. The hardware is being upgraded every few months. The software is being upgraded annually. And so the software and hardware that runs the Bitcoin protocol is going to get upgraded just like your Apple and Android and Microsoft software will get upgraded.
Saylor is adamant that Bitcoin itself remains untouchable as an asset. He describes it as owning a fixed fraction of the global digital economy, completely immune to the chaos that plagues traditional systems. No tariffs, no employees, no corporate headquarters, no single point of failure. It's simply an index of the free market, distributed worldwide. While governments argue, currencies fluctuate, and companies stumble, Bitcoin persists, operating on a protocol that is regularly upgraded, just like any other software you use. A direct line is now drawn between global instability and Bitcoin's growing appeal. In times of war, political gridlock, inflation, or currency devaluation, Bitcoin remains untouched. That independence makes it fundamentally different from stocks, real estate, or government-backed currencies. It functions as digital capital in its purest form. As more people understand the implications of that, the expectation is that adoption will accelerate. The optimism surrounding Bitcoin and related investments isn't naive. Equity investing demands a strong stomach and a long-term mindset. MicroStrategy stock has averaged 75% annual returns over the past 5 years, but those gains come with intense volatility. Bitcoin has delivered roughly 50% annually, with less, but still significant volatility, enough to discourage those unprepared for sharp price swings.
Back in 2020 and 2021, I talked to a lot of power companies and energy companies, and they were about to decommission all their nuclear reactors. We were staring at all the nuclear reactors getting decommissioned, and there was a movement to shut down nuclear energy in this country. And of course, in Germany, they shut them all down. From early 70s, 73, all the way till 2023, the nuclear industry was persona non grata, and it was politically incorrect. And I think the explosion of AI, and when people started using these AIs and realized they're actually quite useful and they're transformational, it created a reconsideration and a political shift in the United States. The Overton window shifted. And as soon as Google and Microsoft and Apple and Amazon realized they needed energy, nuclear became cool again. And we flipped from 50 years of not wanting to build power, whether it's nuclear or natural gas was out of favor too. People wanted to shut down natural gas. All of that changed in the past 2 years. And now the political sentiment in this country is we should develop natural gas. We should develop nuclear power. And of course, we're only about 1 to 2 years into that sentiment shift. But I have confidence that the United States is going to move from a laggard to a leader in the energy generation business, because now we see we need the energy to drive our cars, we need the energy to power up our robots, we need the energy to think 1 billion times faster, 1 billion times quicker, and we need the energy to defend our digital assets like the Bitcoin network. And the only thing that was lacking was the political will, and I think that has flipped 180 degrees. There's bipartisan consensus. There's not even a debate right now about whether we should generate more energy or build more power plants. 4 years ago, you couldn't have done it. And so I think we've been saved by the explosion of digital intelligence and digital assets in this country. It'll be good for the nation. It'll be good for the world. When I was growing up, there were 3 channels on television, and they turned off the television, the signal at like 11 o'clock at night or midnight, and for 8 hours there was no programming. There was no internet. We didn't have, today, we have infinite free music, infinite free television, infinite streaming video, infinite free YouTube. You can get lost, fall in a TikTok hole, an Instagram hole. You can get on stream and Twitch. We have managed to manufacture infinite everything. It used to be you had to have money to get a newspaper or a magazine. And now you can see we live in a world where we have, to say 1,000,000 times more content would be probably an understatement. So the entire society is being inundated with information, and their attention span has shrunk. And so people just don't have an hour to listen to what you have to say. Sometimes they don't have a minute. Oftentimes I think, should I say it in a podcast? Well, maybe someone will listen to it. Can I say it in 5 minutes? That might be too long. Can I say it in 30 seconds? Sometimes I'll write a paragraph and you think, no, I don't have a paragraph. People will read the first sentence, and then I write the sentence and I think people aren't going to read to the end of the sentence. And so the thing you learn from social media is you need to get to the point. So how about tell me what you want to say in 1 second? And the cliche is a picture is worth 1,000 words. And so sometimes I don't give you 1,000 words because you would lose 99.9% of the audience. In fact, I would say you'd probably lose 99.99% of the audience. If it took 1,000 words, show me the picture, and that will go viral. And you're doing people a service to give them an idea that travels 1,000,000 times faster, that is 1,000,000 times easier to digest, because people just don't have time. They're busy. They're being inundated. And when you see those images, that is us communicating something cheerful, constructive, useful, perhaps profitable to someone. But like if someone says, hey, I wrote a book on this, here's the book, do you want to read it? I mean, how many books can you read? Literally every book written in the history of the human race is available for free to you right now. Do you really want someone with a good idea to give you 250 pages and tell you to read it? Or do you just want them to boil it down to 1 sentence, 1 tagline, or 1 picture? Because I'm like, show me the picture. Okay, got it. Now I can move on with my life. Thank you. We're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035. If you don't want to take any counterparty risk, and if you have a long time horizon, then you should probably buy the Bitcoin because you can take custody and take it anywhere in the world. If you simply want the asset, you want it in a brokerage account, you should buy the ETF like IBIT. It's going to take you 10 seconds to do that. It's easy to borrow against it. If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, like our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity. But if your time horizon is less than 4 years, if you need the money back in 4 weeks or 4 months, then you probably want something principal protected. You want low volatility. You should buy a credit instrument. Like STRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit instrument like a treasury credit product like STRC. you'll outperform your money market. You know, you might very well do as good as the S&P index, but you'll be able to buy it and sell it and get your capital back, you know, in a month, in a quarter, in a year, and you don't have to, you know, worry about the roller coaster.
What makes Saylor's position especially bold is his conviction that the current moment is historically unique. He argues that we're living through the early stages of a transformation driven by what he calls digital intelligence, digital assets, and digital capital. According to him, money will soon move at the speed of light. 1 billion AI systems will think 1 billion times faster than humans, and 1 billion robots will build everything we need. In that world, efficiency explodes and old systems become obsolete. He points to energy as a key example. Just a few years ago, the United States was moving to decommission nuclear reactors, and natural gas was politically toxic. Then AI exploded, and suddenly, Google, Microsoft, Apple, and Amazon realized they needed massive amounts of energy to power their ambitions. That shift flipped the entire conversation. Now, there's bipartisan support for energy expansion, both nuclear and natural gas. Saylor credits the rise of digital intelligence and digital assets for saving the country from an energy crisis it didn't even know it was walking into. This broader vision is why Saylor isn't worried about Bitcoin's short-term price action. He sees the asset as part of a larger technological wave that's just beginning. He even claims that MicroStrategy used AI to design their new credit instruments, creating $8 billion in value, and launching what he calls the most successful preferred stock in modern capital markets history. To him, every company should be thinking about how to use digital tools to transform its business, because the opportunities are unprecedented. But the most telling part of his argument is how he frames the criticism. When asked about short sellers like Jim Chanos, Saylor dismisses them entirely. He doesn't see skeptics as serious participants in the conversation because, as he puts it, nothing great has ever been created by a short seller. Their business model is doubt, not innovation. He's also blunt about investor psychology. If your time horizon is less than 4 years, or if you can't stomach the volatility, you shouldn't be buying MicroStrategy stock or even Bitcoin directly. You should be in credit instruments that offer stability and predictable returns. However, you believe in the long-term vision and see where digital capital is headed. In that case, this pullback is precisely when you should be paying attention. Saylor ends with a simple reminder: equity markets are irrational most of the time. They reflect emotion, not fundamentals. And right now, while sentiment is negative, the underlying reality is stronger than it's ever been. Bitcoin's infrastructure is maturing, adoption is accelerating, and the political and regulatory environment is more supportive than anyone expected. For him, volatility isn't a bug, it's a feature. It's the price you pay for exponential upside. So the question is Bitcoin's current pullback the last chance to buy before the next explosive rally? Or are we watching the beginning of a long decline that even Saylor can't stop? Thank you for watching. Don't forget to like and subscribe.